The second summit between the Association of Southeast Asian Nations, ASEAN, and the Gulf Cooperation Council, GCC, concluded on 27 May 2025 in Malaysia. The two regions agreed to deepen cooperation across various aspects. The focus on inter-regional cooperation has increased in prominence following higher protectionist measures from the US. Given the relatively low starting points of economic cooperation between the two regions in terms of trade, investment, as well as tourism, the scope to broaden and deepen ties across various aspects of the economies for these two large regions is huge. The economic ties between ASEAN and GCC for the moment include trade, investments, and tourism. The ASEAN region recorded net trade deficits with the GCC over the past decade. The deficit in dollar terms has been volatile, reflecting movements in global oil prices and economic downturns, for example, the pandemic of 2020 to 2022. More fundamentally, however, the share of ASEAN exports to GCC economies has remained low at 1.6 to 2% of total exports from 2017 until 2023. Similarly, imports as a share of total ASEAN imports accounted for 5 to 6% of the total. Imports from GCC into ASEAN are largely focused on oil. Saudi Arabia and the UAE account for about 49% of crude oil imports from non-ASEAN countries. The dollar value of mineral fuel and oil imports has increased sharply for Vietnam and Malaysia over the past decade, but has declined for Indonesia while remaining relatively stable for the Philippines, Singapore, and Thailand. Exports from ASEAN to GCC economies were relatively more broad-based, encompassing electronics, precious stones, metals, machinery, as well as certain commodities such as palm oil and natural gas. By economy, exports from Indonesia, Malaysia, Singapore, and Thailand to GCC are bigger compared to Vietnam or the Philippines. Similarly, tourist arrivals into ASEAN from GCC countries account for less than 1% of total tourist arrivals. While country-specific breakdowns are harder to gauge given patchy data, it is clear that this route for greater inter-regional exposure has legs to go. Thailand seems the most popular destination spot for GCC tourists, followed by Indonesia and to a lesser extent Malaysia and the Philippines. With trade, investment, and tourist arrivals at fairly low levels between ASEAN and the GCC economies, the room to build on the economic relationship for these regions is enormous. However, each of these regions is heterogeneous, and there will need to be made a considerable effort between both sides to identify sector and country-specific synergies that can yield desired outcomes. But in an increasing world of protectionism, we do think that greater intra-regional cooperation is the way to go.